All right, guys, back to work. I know that the holiday can't last forever, right? We get back to work here, get some money to make here this first week of a brand new year. It is Monday evening. It is the third day of January, and that's right. It is 2022. A very happy new year to you. And of course, as always, my name is Joseph, and welcome back to our nightly newsletter. Now, if you're watching for the first time tonight, it's great to have you with me. My job tonight is to get us ready for the best trades, the best setups, setting up for tomorrow. That's Tuesday's trading session. I got a great video in store for you guys tonight. Charts are already in the background, as you can see. Got the S&P, we got the Nasdaq, and we got the crude oil all prepped up and ready to go for tomorrow. Got some great setups on our radar for tomorrow. Got a bunch of ranges on the charts. You know, it's not surprising the market's getting back to work here this week. Got a bunch of ranges. You know me, I love range-bound markets. We're fading breakouts. We're trading breakouts. Got a bunch of great trades setting up for Tuesday. By the end of this video tonight, you'll know my favorite trades for tomorrow, so make sure you watch all the way to the end. Before we jump in, though, and get our hands dirty on this lesson tonight, I just want to make sure to remind you, make sure you subscribe to our YouTube channel. I publish this video every evening during the week, so don't miss tomorrow night's video. Make sure you subscribe to our YouTube channel. If you have any questions for me, drop those questions in the comments section. I'd love to answer any questions that you might have along the way. And if you guys enjoyed this video as much as I enjoy making it, if you missed me while I was away for the holiday, I missed you as well. Do me a favor, hit that like button for me. I appreciate you guys sharing the love here on this video newsletter. But as you can see, though, time is ticking. I'm a little bit behind schedule here. First day is always the hardest day to get back on the saddle again, right? But let's get this party going here. Tuesday is right around the corner. Now, of course, as I mentioned in the introduction, we got a lot of ranges here on the charts here, right? So range on the Emini, range on the Nasdaq. And I'll tell you, it doesn't, at first glance, it doesn't look like a range on the crude oil, but there are a couple very important hidden clues. And those hidden clues are telling us we are likely going to be trading the oil like a range for tomorrow. So again, range-bound markets are magnets, right? Ranges act like magnets. We're buying low, we're selling high. And again, we'll be looking for breakouts. Got a couple breakout patterns I'm watching here for Tuesday's trading session, right? We're going to cover all the details tonight as we go deeper into this video lesson. Before we jump into each chart, though, speaking of tomorrow, why don't we take a look at the schedule for tomorrow? Because we do have quite a bit of, well, not quite a bit. We do have some big news here in the schedule here for tomorrow, of course, right? Tuesday, January the 4th. The big news tomorrow, we do have an OPEC meeting tomorrow, which will usually happen about noon gamut time, right? It'll be usually right about 9 o'clock, 9:30, 10 o'clock here, local time here, or should I say Eastern time, right here in the U.S. That OPEC meeting, it might have a little bit of impact on crude oil tomorrow. I would expect oil to be more responsive, inventory report on Wednesday. So the big news I have on my radar for tomorrow is that ISM manufacturing report. We're going to have ISM tomorrow on Tuesday. We're going to see more of ISM later on in this week. Now remember, the big news at 10 o'clock Eastern time, that means you want to trade around it, right? We're not going to be trading right on top of the news tomorrow in the trade room. 10 o'clock is the big news. By about 10:10, 10:15, we'll have all the whipsaw behind us. We can find some good trades trading the reaction to that news tomorrow. So make sure you're aware of that. The big news tomorrow, I would imagine the best setups tomorrow morning in our trade room are probably going to be in that 10 o'clock to 11 o'clock, 11:15 block tomorrow once that news comes out. Now, of course, we'll be trading tomorrow morning and every morning, Monday through Friday, in our trade room at 8 o'clock Eastern time. I would love to have you there, right there with me. I'll put all the membership information, all the registration links you guys need, the description of the YouTube video. So make sure you grab that on the YouTube channel here, or hit that big button for me right below this video tonight on our website. But keep that in mind, right? Big news tomorrow is that ISM manufacturing index, right? Definitely don't get caught trading into that 10 o'clock shock tomorrow. we do anticipate that to be some of the biggest news of the week. And then don't forget, the biggest news of the week is later on Friday, January 7th. We got pretty much the first non-farm payrolls of the new year. It'll be interesting to see how inflation has affected this, how this new Omicron variant has affected those jobs. So we'll talk more about the employment number, right? The jobs report as we go deeper into the week here this week. So let's keep the party going. We'll talk more about some major news later on this week, but keep that on your radar for tomorrow. That 10 o'clock ISM manufacturing news is going to be the biggest news on my radar. Back to our charts here. Got the S&P ready. Nasdaq's ready. Oil. Oh, the oil's always ready, right? Glad to see you are ready right along with me. Why don't we jump into the S&P here? Let's get this party going here on the E-mini. Lots of trading ranges on the charts right now. And the most important thing you want to remember about a range-bound market is that, first of all, ranges act like magnets. And so what you want to do is you want to try to find levels of support down below the range, levels of resistance up above the range, and basically just trade against the breakouts, right? Trade against the breakouts. What goes up, we'll try to bring it back down. What goes down, we'll try to bring it right back up again. Now, we'll go over, of course, all the setups I'm looking for on this. Let's take a look at a little bit bigger picture here on this S&P as well, because I think it's important that we see kind of where we are in the bigger picture. And you'll notice this range today is actually just a very small part of a larger range, as you can see just overhead, right, as we came out of the end of the year last year. So as you can see, with the range down here acting as a magnet, we have a ton of resistance here up overhead. Everything from the all-time high above that range, the major swing highs from today. I can mark up the amount we went below the range, and I can project that higher. So there's really no shortage of areas of resistance up overhead. And so when you look at it that way, with a bunch of levels of resistance up overhead and a range down below, it's difficult to want to get long in this market right now. Now, obviously, the buyers have control of the market's momentum. It's not difficult to see. We're seeing higher highs. We're seeing higher lows. You could definitely see a nice strong run going higher here. So I'm not opposed to being a buyer on the S&P, but we've really got to see a nice firm breakout going higher here before I can really start to trust anything. So really at this point, it's just kind of a game of wait and see at this point now, right? If we go up, will these buyers be able to hold this and go through? If we go up, will we get that short and sell back down? Or will we actually just collapse off these highs and try to make that rotation back down to some of these support levels that we have below? So again, there's plenty of ways that we can trade this. Now, I think the easier money right now is probably going to be if the market starts to pull back. Let's talk about if the market goes lower here, how we can sell it as the market goes down. The most important thing you want to remember is that even though the range acts like a magnet, whenever you have a lot of bullish momentum, you have to kind of respect that momentum. You can't just sell into a bull market just because you're at a level of resistance and you get a range magnet down below you. So what I'll usually do in these situations is I'll use what we call the 2-try rule. As the market pulls back, I'll let the buyers try a couple times, try twice to be specific, right? 1 try, 2 try. Now there are a couple different ways we can take this trade. One, try to think about where all those exits, right? Where would all the stop losses be for those buyers, right? That's the idea here. We're trying to rope in these buyers, let them commit a couple times, and then just try to short right into the stops, because when buyers get stopped out, well, they have to sell their way out of that position. And so this is a very easy way to make some quick profit, right? Some quick cash here for the new year as we sell off this high. Another one of my favorite kind of entries on this is to use a trap. These are not as common, but man, oh man, are they very powerful, right? So buyers try once, Buyers try twice, grab kind of a little trap high there, nice strong signal candle closing below the moving average, and you've got yourself a nice short right off of that high. So again, looking for the buyers to try once, the buyers to try twice. One of my favorite entry techniques, again, is that trap off the high between you and me. I also like to mark up the low of that new channel, right? Grab that channel top, right? There's a lot of different ways we can use that 1-2 try rule along with that failure pattern going back down into that trading range. And I should also remind you too that we want to trade the rotation. Right? So for example, if the market is to start going lower now, there's a really good chance these bears now are hunting for these lows, right? At the very least, that trend line coming up off of the low. So if we can get that 1-2 short, don't forget now to keep it going. Find that new channel off the low, off the high, and then look for that first test, right? That what I call the first test, right, is the best test, right? So again, 1 try, 2 try, we're shorting off the high with that 2 try failure, but then don't forget to come in, grab that new channel and hit it again to trade the rotation. Now, what if we don't get that 2 try rule right now? What if the market was to kind of simply just collapse and run lower? That could definitely happen. What's the problem in that situation? The problem is I don't want to chase it. I don't want to sell too low. I've got that rising support trend line coming in there. So whenever I have that rising support trend line that I'm kind of worried about there, mark up that swing, find that new hidden channel, and then look for that trap. Traps are almost always going to be your best entry. You know, for example, right, if we can't get the short off the high and the market simply turns over and runs lower, grab that trap, find that channel, right, off the lows, right, because that's you'll have to begin with. Find that channel and then short that trap high off the high of that channel. So some nice easy ways to short this thing if we do get this right to roll over here right now. How about if price goes higher here? If price goes higher, the real key right now is, again, I can pretty much look for that same 2 try failure coming off these highs right now. So even if we go up into that pendulum swing, right, up into those all-time highs, I can definitely still keep using that technique, right? 1 try, 2 try, find that hidden channel for the short, find that trap for the short, right? Nothing new there. And then again, we can still look for that drop off the high here, find that new channel coming down, then as we always say, right, trade the rotation, right? Trade that rotation. So a 2 try failure, and then of course, as always, you want to short that first test off the high of that new channel. Same stuff, right, to sell off the high here. How do we buy it though? What do you think it would take right now for me to want to get long? We'd have to see a breakout. Now, what does a range breakout need to do? Well, a range breakout needs 2 things. One, we have to see a decent push higher. Second, we have to see the buyers hold the pullback and go. We call these 1, 2, 3 breakout patterns. 1, 2, 3 breakout patterns. The key, guys, here's the key. The key is it doesn't matter how strong that first leg is. Okay, that first leg can be really, really strong. If there's a range, right, like back here, right, this one right back here, right? Look at how strong that move down is. Right? Does it matter? It doesn't, because if the sellers try once, twice, we're going to probably go right back up into that trading range, right? So don't get fooled by a strong pop higher. If the buyers can put their money where their mouth is and really start to hold that pullback, now we have something that we can look for and we can trust, right, to get long. So at this point here, we've got to get these buyers to get up. We got to see him hold that pullback, and we got to see him jump off that moving average. 1, 2, 3 breakout pattern. Now, what do you do in that situation? In that situation, you now go find basically a new channel, right? This range below us is no longer a factor anymore. Once we get that 1, 2, 3. Now simply mark up that high. Remember, draw your channels backwards, as we always say. And what you want to do is you want to get in on the first test off the low of that channel. Now, I've talked a lot about the first test, right? The first test is always the best test. What do the rules look like? What do the entry patterns look like? How do we actually buy that, right? Do I just blindly buy it? Of course not. My two favorite ways to buy this are going to be seller failures off that low and basically bull traps or bear traps, right, off of that low. Now, I'm not going to go over all the details of the actual entry techniques that we use in our trade room to, for example, buy the first test of that 1, 2, 3 breakout. But I'll tell you, if you want a much deeper dive into all my favorite entry patterns, all the rules that we use, when to use them, when to avoid them, I've got hundreds of examples included with our free quick start class here at School of Trade. If you haven't done so already, make sure you grab the little pop-up. I'll put a little link up there for you in the upper right-hand corner. If you're like me and your goal is to earn income in these markets each day, that 3-step strategy I teach as part of that free quick start class will give you a great roadmap to follow, the same roadmap that we use every day in our trade room. Now, there are a couple different variations of some breakouts that we can use, right? Here's a 1, 2, 3 breakout pattern on the S&P, right? And of course, that first test is the best test. I've got 3 different breakout patterns we'll talk about tonight on this video. This is one of them here on the S&P. So make sure you stay tuned. We'll keep on talking more about some other breakout patterns as we go a little bit deeper into this video. And then as we go lower, can I buy down here? You absolutely can get long down here. Just make sure you take out that low, bears once, bears twice, right? And then back up into that low we go. So that'll give you an idea of what I'll be looking for tomorrow morning, and of course every morning in our trade room. And again, we open up tomorrow at 8 o'clock Eastern time. Let's keep this party going though, right? S&P is just one of our favorite markets in the trade room. Why don't we grab some Nasdaq here? Nasdaq's in a really similar situation, as you can see. In fact, you could say the Nasdaq is even more dramatic with that trading range right in the middle. You know, basically, simply put, the market opened up, gapped up, jumps into a range here, right? The buyers sort of take it higher, they fail, the bears run it lower, and surprise, they try once, they try twice, and we go back up into that trading range, right? That should come at no surprise to you now. And now, of course, the buyers obviously have control, just like the S&P. There's no doubt about direction right now, but look where we are, right? The amount we went below the range, the amount we go above the range. I'll tell you right now, I have a bunch of rules we follow in our trade room when it comes to ranges, and one of the most important rules is do not fight those pendulum swings, because they are remarkably strong at, well, for example, stopping those buyers in their tracks and sending the market back down into that trading range. Now, you'll also notice too, I've got some breakout areas over here, and this is definitely important. Anytime we have a range, remember we said earlier, it doesn't matter how strong the first leg is, right? The buyers have to actually hold that pullback and go. Where do they want to go? Remember, the breakout leg is a measuring leg. And so that's going to give us a really good idea, right, of where we might have some targets waiting overhead if we can get that breakout, right? We talked about that 1, 2, 3 breakout pattern on the S&P already. I'm going to cover a couple more here right now on the Nasdaq, right? So those traps, those failures, those pullback combinations, all the entry setups we talk about in the free quick start class, like I mentioned earlier. That's one of them right there here. So I'm going to get rid of that here so we can keep that nice and cleaned up. So we know the range is a magnet, right? We know our job in a range is to buy low, sell high, and if we get a breakout, trade the breakout. But until we see proof, we fade those breakouts. I've got my levels of support down below, my levels of resistance up above, and we're going to see if these buyers have what it takes here to break this thing out. Now, much like the S&P, it'll be a good idea for us here to look a little bit further out, because you're going to see, yeah, the S&P is pretty bullish bullish overall right now. The Nasdaq, though, look at what a difference the Nasdaq looks like. Right? Now, maybe you call this a bull flag, right? So strong move up, it's a bull flag coming down, the buyers come in, and the buyers had everything they needed right there, right? The buyers had everything they needed right there to run this thing right back to retest those highs. Did they do it though? No, they didn't, right? The market rolls right over here. There is no doubt about it. There's a lot more bearishness right now on this Nasdaq overall. So again, unless these buyers can really, unless they can really show us some proof here right now, I got to be thinking about those shorts coming off the high here right now. So, how do we buy it? How do we sell it? How do we trade that breakout? Let's talk about this. Unlike the S&P, the Nasdaq has this nice trend line coming in right now. And anytime you see these nice rising support trend lines, that is where the money is, baby. That's where the money is right now. We talked about the 2-try rule right earlier. So same thing applies here in the Nasdaq, but think about how I can use that trend line now, right? Could I possibly go like a 1, a 2? Yes, right? See, now you're thinking my way now, right? So now we got the 1-try, the 2-try. Again, the 2-try rule. We want to sell off these areas of resistance, but we can't just sell because we're at a level of resistance. We got to respect the bulls here, right? So buyers try once, buyers try twice. Can I get some sort of trap above that high, right? I mean, wouldn't this be a perfect setup right here, right? So we come up, the buyers come in, try once, they try twice. We see a nice trap high off that, right? Remember, between you and me, mark that low, mark that high. That's a great spot for a short off kind of that hidden channel, right? If you will. Either way you slice it though, that's a really easy way to use the 2-try rule. And then what you want to do is think about now, get that nice strong signal, right? Closing down below the moving average. Not to worry, I'm going to talk about what the signals look like and which moving averages work best. I cover all that stuff inside that quick start class I mentioned earlier. You'll learn it all there, not to worry, right? I can't go over everything here in this already very lengthy video for you guys, but not to worry, we'll get a deeper dive in that quick start class, right? So we get our short off the high, right? And remember, as the market rolls lower, trade the rotation. We go down, we go back up. Can we go up and then go back down again? Yeah, that's the idea for the sellers here. Now, of course, at that point now find that new channel. Remember, draw it backwards off that low. Find that hidden channel. And then there's the money right there, baby, right? Little trap off that high. As I keep mentioning, right, you want that first test, maybe a trap, a failure, a pullback combination. Again, I'm talking about entry setups right now that we talk about in that free quick start class. I want that first test, right, off of that high here. So lots of easy ways to short this thing, come off the high. Use that 2-try rule. Right? Drop it off the highs there, find that new channel, and don't be bashful, right? Get that bull trap, get that buyer failure coming off the high of that new channel. What if we just drop like a rock here, right? What if we don't get the 1, the 2, right? What if it just drops like a rock here? Some ways you can trade this would be, one would be a 1, 2, 3 reversal. That's perfectly fine by me. Remember these 1, 2, 3 moves, right? 1, 2, 3 reversal now. What do you do in that situation? Yeah, you mark up that low, you mark up that high, and what do? You drill down to your faster time frame, right? This is a 4,000 tick chart in the Nasdaq. We are not trading a 4,000 tick chart in our trade room, right? What I'll do is I'll drill down to my faster time frame, right? Maybe I get a bull trap, a buyer failure, a pullback entry, right? Maybe some strength entries coming off of that move going lower. That's an easy way to sell it going lower here. Remember, where does the market want to go? It wants to get that pendulum, right? It wants to take out those lows. It wants to get that rotation as we go down here. It also wouldn't surprise me too if the market was to tumble, right? Really, really tank off that high. If it really starts to tank, and this will also apply to the S&P as well, think about that 2-try trap, right? That 2-try trap setup as we go, right? That way you're not chasing after it, right? So if it does start to really tank, Remember this from last year, right? Or back in December. Strong move down, shallow pullback, doesn't quite touch the moving average, lower low, traps, baby, right? Strong move, shallow pullback, lower low or higher high, in this case, lower low, traps, right? That's my favorite trades. One of my favorite trades. Strong move, shallow pullback, right? Strong move, shallow pullback, lower low in price, traps, and if you can, not required, but find that channel and you got that short off the high there, right? That'll be an easy way to short this thing as we go back down again. How do we buy it right now? How do we buy it? Well, again, we talked about the 1, 2, 3 breakout. We've got that, obviously. We can mark up that new channel. Again, we're going to drill down to our faster time frame, find our failure, right? Find that failure setup, find that pullback combination. I love these failure into pullback combos, right? We trap in the bears below the moving average, right? We then grab that first pullback off the EMA, right? We call these failure into pullback combinations. You'll see a lot of the examples of these inside that free quick start class that I mentioned before. So definitely check that out if you haven't done so already. Now, what's one more breakout pattern, right? We talked about the 1, 2, 3 breakout. What's another one here? How about a 2 try breakout? Yeah, 2 try breakout. Now, a 2 try breakout, again, would be a strong move up. It'd be a shallow pullback. It'd be a higher high in price and that trap low. Now, don't let that measured move spook you. The key is strong move up. Okay, that gets the momentum going. The shallow pullback will drive everybody nuts because they all want to get in before they miss that run back up to these highs here, right? Once you get that higher high, now look at that prior swing. We have a benefit of that rising support. I mean, this is a fantastic trade as well, right? So keep an eye on that, what I call 2 try breakouts. And again, I've got 3 breakout patterns. We've talked about 2 of them so far. I'll cover one more here on the oil once we get over to the oil chart here. And then I would also too, because of the situation that we're in right now, where there definitely is space to go back up to retest these highs, right? Remember, the S&P is pretty much already at its all-time high, right? That's the all-time high right there. The S&P, there's not much more space there for the S&P to run. Look at the Nasdaq. The Nasdaq has a lot more potential because you can see that all-time high is way up top there, right at that 59.5 level. So what you want to think about in these situations is, let me kind of get rid of some of this extra stuff here so we can keep it nice and clean here for you. It would not surprise me as we go higher here if we find another trading range. Sometimes what will happen is the market will go into a range, they'll spit out the other end, and they'll go right into a new trading range, right? This might happen on the S&P, but it's not as likely on the S&P because the S&P is right at that all-time high, right? So we may end up kind of treading water there on the Nasdaq. That's one definite kind of difference, right? Now, what's the game plan if we go higher and we start going sideways? What do you do in that situation? What you do is you find levels of support below the trading range, right? So for example, right, find that level of support, right? You find levels of support below the trading range. Now, I like to use expanding triangles and prior swings. I like to use what I call range expansions. So the size of that range, right, like we have back here, right, the size of that range will create the levels of support and resistance. So we'll know a lot more about this tomorrow once we kind of get into the trade room tomorrow morning, right? But the size of that range will also help us find some key areas of support as well. It's a bull market at that point. Once we see a trading range, that new range becomes the magnet. Okay, remember, ranges are magnets, and recency. What is the most recent range we're seeing? If we see a new range going sideways right now, that new range becomes the magnet. So what do? We wait for a pullback. We basically look for 2 basic trading opportunities with a bull market into a trading range. One of them is pretty simple, right? It's just simply a seller failure off a support level underneath that trading range. Bull market into a sideways range, find support below the range, wait for the test of that support, wait for those sellers to come in and try to foolishly get short. I can see why people might like to short that. But again, once you find that trading range, that becomes the magnet. So use that seller failure going higher. And then what you want to do is you want to find that new channel, right? Find that new high, find that new low, and grab that first test, right? First test is the best test. Where does the market want to go at that point? It wants to complete another pendulum swing, right? It wants to get up. Remember, right? Like these back here, it wants to complete a pendulum swing. So if we see a range up here tomorrow, focus your energy on finding reliable support levels below that range. And again, you'll learn more techniques that I like to use in that free video class that I mentioned earlier, right? Grab that seller failure pattern on the breakout and then trade the rotation, right? Trade that turn off that new channel, okay, as we try to take out that high as well. All right, so keep that in mind if we start, right? If we start to start going sideways here up at these highs. Another idea here. In fact, let's keep going. I'll talk more about the next breakout pattern on the on the crude oil. All right, let's keep going. Get a pretty good idea there on the Nasdaq there, right? I've got one more breakout pattern though that I want to go over here, and we'll talk about that here now on the crude oil. And again, all these breakout patterns, whether it be the 1, 2, 3 breakout or the 2 try breakout, right? They all apply to pretty much all of these markets right now because they've all got some ranges involved. Now, what about the oil right now? Boy, I'll tell you, oil's kind of a weird one, right? At first glance, you're like, what is this market up to here right now? At first glance, it looks like this is just nothing but a bull market, right? But a bull trend. There really isn't any obvious trading range, is there? There's no obvious rectangles or triangles on here. Might be a little tiny range brewing right there. I don't know. I'm probably not going to get that as a range here for tomorrow. The big giveaway is this though. Right? There's two really big giveaways. The first, I think, is the most important. The first giveaway is that, remember, anytime we see a strong move in one direction, if this market is trending, it's going to have no problem retesting that high. Okay? Repeat after me. Strong move in one direction, expect another leg in the same direction. Right? So now think about that. Right? So strong move up. We should have those buyers retesting that high at the very least, right? At the very most, they should get that measured move, right? So we push up. Buyers should be able to hold and retest. Oh, we push down. The sellers should be able to, right there. Look at this. You're telling me, bears, you get all that movement going lower and you can't just retest that low? Come on, right? That's a very big giveaway. And now we go higher here. Big, strong push higher. Right? Look at this silver platter they get. They get a new channel here, right? Little trap below that low, right? Buyers, why aren't we closing the day at those highs right now? That's the giveaway. The giveaway is that every time we saw a strong push, no follow through. Right? No follow through. Strong move, no follow through. Strong move, well, at least for right now, no follow through. What that tells us is this is most likely setting up for one big trading range. That's the first clue. Then, as you can see, if you take out the weekend gap. Now, what's the weekend gap? The weekend gap is just simply anytime there's a gap between Friday afternoon's close at 5 p.m. and Sunday evening's open, right? So it's Friday's close all the way to Sunday's open. Whenever there's a gap there, those gaps, right, that closing price from Friday acts like a magnet. Well, looky here. We measure the amount above, we measure the amount below, and come on. That's a little bit of a coincidence. I'd be surprised if it is, right? That is a great example of what it looks like is going on right now is that weekend gap is becoming kind of the epicenter here, right, of this trading range. So I don't want to sound like a broken record, but this is very similar to the other charts that we've talked about here, right? We're very bullish right now. There is no doubt about the bulls having control. But do you want to buy right now? No, I definitely don't. Not yet. We have to see some more proof on this. And then again, like the others, let's look now and look left here. And hello, look where we are. Right? Even if the market runs higher here right now, we're still dealing with, definitely not all-time highs on the crude oil. We've got all the way back up to the 80s here before we start to really, run into some major highs here, right, on the oil. But as you can see, though, that's one big trading range. And so all of these areas here are major areas of resistance. And so as the market runs higher here right now, we, again, much like the Nasdaq and the S&P, we definitely be keeping an eye on the short side going back down again. If we do get a breakout, though, I'll tell you, though, there's a lot of potential if, big if here, if these buyers can do it, right? Because, again, we go all the way up to, I think what is it, up to the 80s up there. I'll have to double check here. I'm still getting kind of caught up here this afternoon on these slower time frames. But I believe we have all the way back up to the 80s, though, right? Until we start to see that next level of resistance, right, up overhead here, back at those highs, back for the end of the year here. So there definitely is potential for these buyers to make a run, but they got to show us some proof here before we can really sink our teeth in anything on the long side. So how do we buy it? How do we sell it? A lot of this is going to be similar. We talked about on the Nasdaq, right, and the S&P. You can see we got that strong run up. Now we've already cleared that trend line, right? So unlike the Nasdaq, it doesn't look like this one's going to be able to get that trend line for that short like we had on the Nasdaq here. But as we pull back here, there's your buyers trying once now. Let's get those buyers trying twice now, right? Can I get that trap, right? And of course, we're going to put all these pieces together, right? Get that trap off the high. Remember, you want that nice, strong signal candle, right, coming off of that trap high. And not to worry, I'm going to talk about the right time frames to use, the signal candles to look for. All the entry techniques are covered in that free quick start class, linked up in the upper right-hand corner. And then don't forget, right? Always draw that trend line off that low, off of that high, find that channel, right? And that'll be a great way to sell it right there, right? We got that one, we got that two, back down again, and then, yeah, baby, first test is the best test, right? First test is always the best test. Now, I don't know what entry pattern I'm going to use off the high of that channel. We'll have to wait and see what we get right there. But a lot of times what happens is the market will dump off that high, little shallow pullback there, right? You can mark up that low, mark up that high, find that trap, get back above to the high of that channel, get that trap, get that failure, get that pullback combination, right? It's the 1-2 try failure off the high, respect those buyers, and then again, grab that first test, trap, failure, pullback combination. And then where do we think this market wants to go? It's going to want to take out. It'll definitely want to take out those lows. If we don't get the entry off of the high here, if the market was to, for example, right, just take off to the downside, remember, strong move down, shallow pullback, lower low in price, that trap setup is one of my favorites right now, right? And again, if you can find that channel, even better. You don't need it, right? But once we get that strong push, that shallow pullback, that lower low in price, those traps are always going to be on my radar. Another thing you want to think about here is, what if the market was start going lower and start to grind, right? This happens a lot. What do you do in that situation? You know, you're not getting that trap, you're not getting that pullback. What do? You draw that channel. Remember, anytime we see a strong move in one direction, the odds are very good. We retest that low, strong move down, kind of grinds down, right? These are usually going to be spike and channel patterns as it grinds. Spike and channel patterns are notorious for those bigger channels, right? Find that bigger channel, find that trap pattern, right? And short it off the high here. anytime we see a strong move in one direction, there's a very good chance that they retest that low here. So some nice easy shorts there, right, as we go lower here. How do we buy it as it goes higher, right? Now, keep in mind too, if we were to make a move all the way back down, could I buy down here? I can, but I'd want to use the same technique going back in the opposite direction, right? Which means let the bears try once, bears try twice, right? Maybe it's that trap entry, maybe it's that hidden channel entry, right? Nothing new there, just different direction. And then as we go higher here, right, we find that new channel. You got it. You're a pro at this stuff now, right? So now we're trading the rotation, right? Bears try once, bears try twice. It's a trap off that low, right? It's a failure. Basically what you're doing is you're waiting for those sellers to get short. And then once they realize they're wrong, they got to buy their way out of those shorts, and the market will just snap and run higher here, right? So it's that, again, it's that two-try failure, trap, hidden channel entry into that first test. And again, we'll know more about the first test tomorrow once we see it in the price action tomorrow morning in our trade room. That's a good thing to keep in mind there for the buy side here at those lows here. Now, as we go higher here. And also, too, keep in mind, if this does end up going sideways here, right, what do we do in that situation? It's a bull market into a range. We find levels of support below. We wait for that breakout going lower. We talked about this in the Nasdaq, right? Wait for that seller failure. And then don't forget to trade the pendulum swing, right? Trade the turn, as we always say. Mark up the amount we go lower, find the amount we go higher. That's where the market wants to go. Use that failure pattern, use that first test, pullback pattern, first test, trap setup. Again, we'll know more tomorrow once we into it. You'll learn the entry setups we use in that free video class. Going higher here. Right? Going higher here. How do we buy it? Well, we've already talked about the 1, 2, 3 breakout, right? Find that new channel, buy that first test off the low. We also talked about that strong run higher, that shallow pullback, and that higher high, right? That is an option as well. Don't be worried about where you are. If you've got a strong push, a shallow pullback, and that higher high, the odds are almost a guarantee you'll get a retest of that major high. Now, it may not keep going on forever, right? It may retest the high and then come right back down again, but there is usually going to be some pretty good profit, right, to take off that little trap as we go. We call those two-try breakouts. And again, plenty of space overhead here. So plenty of space if these buyers can show us some proof, right? So let's say, for example, something comes out, OPEC meeting is early tomorrow here on Tuesday. Let's say the OPEC meeting comes out, they say we're going to be, cutting production, and that of course will lead to a rise in oil prices. What if it jumps up? Right? It jumps up, it starts to kind of grind, right? Starts to grind, right? That's going to be that spike in channel. What do? You mark up those highs, right? You find that low. You think about, okay, where can I find that trap? Grab that trap, get underneath the moving average, bear trap, seller failure, bullish pullback. Again, trap pattern, failure pattern, pullback pattern, first test, right? First test off the low of that channel. That is a third breakout pattern that we can use here as well. All right, guys. Now, there's a lot of other things we can do as we go higher here. Also, too, one thing you always want to remember is the size of that first leg, right? So one of the most common questions I'll get is, on this type of breakout pattern, where does the market want to go? The size of that breakout leg, right? That's the measuring leg. So when we get that pullback, right, that becomes the measuring tool. Okay, makes sense, right? So if we see this thing really jump up, right, and then it starts to grind, it's that leg right there, right? It's that leg right there. Find that channel. Again, drill down to your faster time frame. Grab that trap, that failure, that pullback combo, whichever entry patterns we get. And then again, that leg right there, that tells you now where that next objective is going to be. All right, guys. And again, I'm going to go over all this tomorrow morning in the trade room. I'll make sure he knows exactly which leg to work with and where the best entries, the best targets are, and most importantly, how to stay out of trouble and avoid the trades that are most likely to fail on us. Now, speaking of trade room, don't forget tomorrow morning, every morning, 8 o'clock Eastern time, we'll be getting together in the trade room. We'll trade all of our favorite markets here tomorrow. What I'll do is I'll put all of the membership links you guys need. I'll put all that stuff right below this video, either on the website or right in the description of the YouTube video. I would love to have you there, right there with us. Again, I talked a lot about that free trading class, that link in the upper right-hand corner there. There's also a link for that on the homepage of the website. If you have any questions, any comments, any concerns, any feedback, I'm always here to help out every step of the process. So don't be afraid to call the office or shoot me an email, or as always, just drop me a comment in the comment section below this video. And as always, guys, thanks for tuning in. I realize the first week back from the holiday is always kind of a crazy mess, right, of getting back in the rhythm again. So I appreciate you guys tuning in here tonight. Now, get a good night's sleep, rest up, and I'll see you tomorrow morning at the opening bell at 8 o'clock Eastern time. And you better come back and do it again tomorrow night on the next edition of our nightly newsletter. We get some more big news on Wednesday this week, and we'll see if we can get some breakouts or if we're still battling with these ranges going into tomorrow evening's newsletter. But enough for me tonight, though, guys. Have a great rest of your evening out there. As always, thanks for tuning in. Hit that like button if you haven't done so already. Make sure you subscribe. And be well, will you? Be nice to each other. Get a good night's sleep, and I'll see you guys tomorrow. Adios, amigos. Bye-bye for now.